You're welcome to another interesting edition of the Market Review, where we bring you key developments in the financial and capital market as it affects the economy. Today, we reflect on the biggest market story from last week, which was Nigeria's successful $4 billion Eurobond raising at the international capital markets. I have to discuss the implications of Nigeria's $4 billion Eurobond oversubscription for the capital market and economy. Mr. Ayodeji, Head Retail Investments, Chapel Hill, Denham. Nice to have you on the show.
Yeah, thank you. Thanks for having me.
Thank you. Before we begin, let us look at key financial and capital market stories from last week. First, the Debt Management Office, on behalf of the federal government of Nigeria, successfully assessed the international capital market, issuing $4 billion in Eurobonds. The issuance was spread across the tenors: $1.25 billion on the 7-year, $1.5 billion on the 12-year, and $1.25 billion on the 30-year instrument, with respective yields at 6.12%, 7.73%, and 8.25%. Total subscription was $12.2 billion, indicating the instrument was oversubscribed by 4.1 times. Also, the Nigeria Exchange Limited Domestic and Foreign Portfolio Participation in Equity Trading Report for August 2021 revealed that total transactions at the nation's bourse decreased marginally by 0.39% from $89.77 billion, which is about $218.20 million in July 2021, to 89.42 billion naira, with about $217.53 million in August 2021. The performance of the current month, when compared to the performance in August 2020, which was 94.45 billion naira, revealed that total transactions decreased by 5.33%. In August 2021, the total value of transactions executed by domestic investors outperformed transactions executed by foreign investors by 44%. To get further market updates, log on to www.proshareng.com and you'll get all the latest developments in the market. We go on a break, and when we return, we'll continue with this interesting story and conversation.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch Web TV. Same news, different perspective.
Welcome back, and if you're joining us, it's the Market Review, and today's focus is on the implications of Nigeria's $4 billion Eurobond oversubscription for the capital market and economy. We have Mr. Ayodeji, Head Retail Investments, Chapel Hill, Denham. Let's first begin with the fact that, yes, it was oversubscribed by 4.1 times. We saw $12.2 billion raised. What does this mean for the capital market and the economy, Mr. Bo?
Hey, thanks. I think the closure of the Eurobond with over $12.6 billion subscription shows the appetite for dollar-denominated assets across the globe. So beyond Nigerians also trying to hedge against any dollar adjustment, we saw significant interest from foreign investors, which also shows that they still believe that despite the crisis or despite the situation in Nigeria, there's still a lot of, I would say, comfort that they can still take in on our dollar investments. If you recall, earlier this year, we were able to pay down at maturity about $500 million that matured earlier this year. So that also shows that there's a bit of confidence. So I think by and large, it's putting Nigeria within the map of investment, while we have our other issues to deal with. Staking about $12.6 billion, that reinstate that confidence. And at the end of the government took about just about $4 billion out of the total total amount of subscription.
So definitely this is a good story in terms of the narrative around our country, in terms of investor sentiments.
Yes, definitely. I think it's positive, and it just reinforces one of those positive news that at least puts Nigeria there in a green light.
We'll still come to that, but let's look also at the September 2021 federal government of Nigeria bond auction. It had a good outing too. I mean, 150 billion naira was issued, but of course it raised over 200 billion, that's 277 billion naira. And the Debt Management Office, according to it, showed that it has now collected about 12.19 trillion naira in 9 months from the sale of FGN bonds. That is really remarkable if you look at that. I meant to correct that, about 2.19 trillion in 9 months. That's remarkable for the domestic market also, and it shows again the confidence level for the Nigerian market.
Okay, thanks. And speaking on the FGN auction for the month of September, we all know that the participation is always going to be based on the yield game as well as liquidity in the system. So the interest we saw was investors trying to take advantage of the higher yield within the bonds market, and also with the anticipation that yields may drop as we progress to the end of the year. Looking at the auction, about 277 billion was allotted, and what the DMO has to issue, if we look at it for the rest of this year, is about 244 billion naira. So when you also compare that to the available liquidity, so we are not expecting that interest rate will inch higher for the rest of the year. And with the successful outing from the Eurobond market, that would also reduce the pressure at borrowing in the domestic market. So I think by and large, we see that the participation we're seeing in the domestic market can be traceable to higher liquidity level, as well as the level of the anticipation that interest rates would moderate before the end of the year, given the amount that government has to borrow will reduce significantly. Where we don't know if it's also true, there's the news that maybe the DMO may also come out to raise additional Eurobond before the end of the year. And if that will be the case, it means that the amounts that the government will need to raise locally will reduce, and as a result, will lead to lower interest rates.
I think one takeaway from what you said about the FGN, the bonds, is that the successful rally will reduce the pressures of borrowing at the local market. Is that clearly what you're saying?
Yes, correct.
Very correct, very correct. Now, very good showing at the international capital markets. Interesting rally also at the domestic market from the FGN bonds. But the macroeconomic environment is very critical in terms of continuing to ensure that we are an attractive market. We're raising capital, we're mobilizing the markets. When you look at the current inflation rate and the current MPR, the interest rate of 11.5%, inflation still decelerating around 17%. What are those key factors that will continue to put Nigeria at that market that attracts all this capital and funding?
Okay, thanks. I think we need to look at it from, two perspectives. In terms of the successful outing we had at the Eurobonds market, that is based on the significant interest for foreign investors as well as local investors. That is for investment. And we are aware that a lot of Nigerians are trying to hedge, and that's increased their appetite. And when you look at it from the foreign angle, you would also look at the low yield environment in the developed climes, which helped in driving their interest across, driving their interest in the Nigerian Eurobond market. But speaking to specifically the macroeconomic indicators, we would see that there are still a lot of challenges. Looking at the Q2 2021 data, yes, GDP rose to 5.01% year-on-year. But you look at it on a quarter-on-quarter basis, you would also discover that there was a bit of moderation, though if we factor in seasonality, there may be some adjustment there. But when you look at the real GDP on a quarter-on-quarter basis, it was a decline of about 0.8%, which shows that we didn't actually grow on a quarter-on-quarter basis compared to the year-on-year basis. In addition to that, we also want to look at the high inflation rate, currently at 17.01% as at August. And when you look at the price of energy cost, price of gas has almost doubled. Look at price of kerosene, beyond the petrol that's being subsidized by the government, which indirectly is also impacting on the ability of the government to have resources to grow the economy. So we know that we are really in a very tight situation. The debts that we're also accumulating will also cause for concerns, because when you look at actual revenue as a proportion of total debt, is almost approaching 100%, which reduces the efficiency of the budget. When I say reducing efficiency of the budget, means that resources, the little revenue or resources that are available, a major portion of it would be used in servicing debt. It means it won't be available for a productive resources. So by and large, there's still major concerns that needs to be addressed. We need to still come up with strategies around how can we raise funding beyond raising loans, and ultimately, how can we create an environment that will attract investment? We need this private investment, both foreign direct investment and the domestic investment. So there's still a lot on the plate of the government to tackle, especially insecurity, so that it will reduce the burden of trying to solve a lot of our infrastructure issues, transportation, and even the agri space. And that would has a major role in playing in terms of prices.
Yeah, I mean, the macro environment is very important. Like you rightly said, ensuring that the environment is secured. And I also agree that there's need for an enabling business environment whereby investors can really come in and process the transactions effectively. But it's very key. The optics are good, but we must sustain those optics. And let's look at the markets. And the recent FMDQ data showed the federal government bonds, they've been dominant, 12.63 trillion naira mobilized compared to the corporate bonds that are 770 billion naira. It shows that the corporate bonds are about 6% compared to what the federal government has raised. The crowding out effect is still there, and what must be done to bring some balance, because we also want to see the corporates participate. We've seen an interesting trend now from various corporates, but we want that traction to continue. What must be done to mobilize and encourage more of that so that it's not a crowding out experience?
Sorry, I didn't get that.
I'm talking about the ratio, federal government bonds and then, of course, the corporate bonds. According to FMDQ, federal government bonds have hit up to 12.63 trillion naira, while the corporate bonds are currently about 770 billion naira. When you look at that, it shows the crowding out effect is still there, and there's need for that gap to be bridged, where corporate bonds are still stepping up. We're seeing some traction, but how can we encourage much of this activity so that it's not a crowding out experience that we've been seeing over the time?
Okay, thanks. I think that would take us to looking at the interest rate environment. And that is also the point, the situation where the CBN is caught in between a rock and a hard place. So for the corporates to be able to issue bonds significantly or use the bond market significantly, interest rate must be favorable. But if interest rate drop to a certain threshold, it puts pressure on the FX. So there needs to be a balance. We've seen the traction we saw last year was as a result of the low interest rate environment. We saw a lot of corporates come to the market and raise significant funds in the capital market. But now, as yields are ticking upwards, we see that it's becoming unviable for a lot of the companies to raise capital using the bonds market. That doesn't rule out seeing more issuances. We know there are some corporates that are already in the pipeline also trying to raise bonds that will be coming out within the next few weeks. But when you look at cost of business as it's going up, so corporates coming to raise capital at a very high rate would also impact on their profitability. So there's a lot that still needs to be done, but it's going to really be a very delicate balance, trying to see how corporate FGM bonds rates comes to a level that becomes attractive, because if you note, most corporates are issued at a premium to FGM bonds. So depending on the level where FGM bonds are, will determine the rate that the corporate will issue their bonds.
And Mr. Bo, in just 30 seconds, what do you see as the outlook for the fixed income market? What are the things that you see as we get into the last 3 months, which will be the last quarter of the year?
Okay, thanks. Looking at the available data in terms of the amount of issuances left, we're also looking at the liquidity that we're expecting for the rest of the year. We expect that rates may still moderate downwards slightly. If the news around the second issuances of Eurobond is true and it is successful, that will reduce the amounts that will be raised in the domestic market. And as a result of that, we will also lower the rate. That notwithstanding, we still expect that there will be more corporate issuances. I know within the next few weeks, some of them will be issuing bonds, and that will also mop up some liquidity for the system. So our outlook is still very soft. We expect rates to still moderate and down slightly as we progress.
That's very fair to understand. As we mark 61 years of existence as a nation, Mr. Ayodeji, and as a market analyst, seasoned one, what is the way forward to develop a vibrant and viable market that is globally competitive and attractive?
Okay, thanks. Very valid question. I believe that it will be more liquidity. We need to create a fixed income market that also brings in retail investors. We need to, retail investors, I mean, buying bonds and be able to trade them. So currently, we've only seen more participation or more activity from the institutional investors, so which does not create much activity as expected, because the retail guys, when you look at standard level for FGM bonds, is still around 50 million in the primary market, 100 million in the secondary market. So I believe that looking at the equities and the fixed income market, we need to be able to create a market for retail investors that will ensure liquidity. So that will create a bit of participation. I know it's a bit complex, but it will also at least open up the economy. Then also looking at the equities markets, we need the NGX to also look into attracting companies that are startup. I know the growth board has been set up for that, but there needs to be a reorientation regarding profitability and dividend payment. People need to see growth in companies, and that is why you see the likes of Jumia. They are not profitable as of today, and they know if they are listed in Nigeria, their share price will be trading as low as 25 kobo, but they are listed on the Nasdaq. What most investors in that climbs, what they look for is the potential for growth. So there needs to be a change in orientation to allow companies, even if they are not profitable, we need to rejig some of the, I would say, some of the indices that mandates that only those that pays dividend people can invest in, and that has limited and has changed the narrative of our market. So there's still a lot to be done so that companies that have great potential but currently are not profitable can also list and partake in these our markets. For those people that believe in them, in their growth potential, will invest in them based on capital appreciation and not just dividend expectation.
Thank you very, very much, Mr. Ayodeji, for this very interesting conversation, looking at the $4 billion Eurobond successful capital raising from Nigeria at the international markets. It's very clear that the sentiments towards Nigeria is positive, but the macroeconomic environment needs to be much more effective to attract these investments. And we also need to ensure that even what we're seeing in the federal government of Nigeria bonds acceptability is sustained with enabling policies. Thank you once again, Mr. Ayodeji, Head Retail Investment Chapter in Denham, for being available to have this interesting conversation.
Thank you.
Thanks for having me.
And that'll be all for this edition of the Market Review Show. If you have questions, comments, or suggestions on the topic of the successful outing of the Nigerian $4 billion Eurobond at the international capital markets, what is the way forward? What does this bring for our markets? Please send them to otobasi.abasekong@proshareng.com. Also join our website, www.proshareng.com, to read our latest news articles and stories and reports on the fixed income markets. We have them all captured for you. You can engage us through our social media platforms displayed on the screen. Don't forget that you need to be informed to make the right investment decisions. Thank you for watching, and keep discussing the financial and capital markets, because they create wealth and economic opportunities. Bye for now.